Good morning and welcome back. Today is episode 4 of Know Your Coverage. This week is the last week of this 4-part series that we did on different ways to insure your homeowner's policy, different ways to insure your house. So the first week we talked about replacement cost, then we talked about guaranteed replacement cost, and last week we talked about increased cost. Today we're going to talk about a coverage called actual cash value. So as we used in our previous examples of your homeowner's policy, when you see, the dwelling amount, coverage A amount, it'll list what your house is insured for and the amount it's insured for. So if your policy is based on an actual cash value amount, what that is actual cash value is replacement cost minus depreciation. So the best example that I like to use is, let's say there's a windstorm that comes through, your roof blows off. In our previous examples, let's say that roof costs $10,000 to replace. Your policy is going to pay the $10,000, minus your deductible. So if your deductible is $1,000, they would give you $9,000 to replace that roof. In an actual cash value policy, what they do is, so that roof costs $10,000 to replace. What they're going to do is say, well, your roof is 30 years old, so we're going to depreciate it by, let's just say 30%. It could be more, it could be less, but for this example, let's use 30%. So $10,000 replacement for your roof, we're going to depreciate it by 30%. So you're going to get $7,000 to replace it, minus your deductible, so $6,000. So as you can see, it drastically decreases the coverage. The coverage is a little less expensive, and that's why some insureds choose that option. It is a very rare case that we see that on a homeowner's policy. So I strongly advise, if you haven't picked up anything in any of these videos, this is the one piece that I would say, check your policy. If you don't know that it's actual cash value, you should really talk to your agent, call us. We can help walk you through that. The most common times we see actual cash value used is more for people that are buying houses to rental properties. Most of the time, these landlords, they can do their own work, they can make their own fixes. And they're more so just worried about the investment of the property. So they're not so much worried about replacement, fixing it. Again, they can fix a lot of the stuff by themselves. They don't need to hire a contractor. It's not going to cost them near as much to repair things. So they're not as worried about it. But in regards to your homeowner's policy, the house that you live in as your primary residence, I would strongly encourage that you check your policy to see if you have the actual cash value on there, because again, you may be in a bit of shock if you ever have a claim, and they do include the depreciation. Instead of getting that $9,000 after your deductible, you get $6,000 after your deductible, and you have to cover the rest. So again, this wraps up the 4-part series: the options, replacement cost, guaranteed replacement cost, increased cost, and actual cash value. Again, check your policies. If you're not sure, give us a call. Call your current agent. We're more than happy to help. As always, we appreciate you allowing us to help you. So again, if you get something out of the videos, even if you don't, we would appreciate it if you like, share, follow. We will put our links in the comments below: Facebook, YouTube, and Instagram. And always have a great day. Thank you.